Today, I would like to talk about an industry in China that is facing serious challenges. In fact, several industries in China are currently facing significant difficulties. Those familiar with the situation in China might think I'm going to talk about the real estate sector again. Of course, the real estate industry is indeed facing serious problems, and the financial sector that lends to real estate companies is also in bad shape. However, today I want to discuss another industry that has likely not been highlighted before but has become a very significant issue. Yili. This is a major dairy company in China. It's a very famous brand in China, and it's no exaggeration to say that every Chinese person knows it. Those who have studied abroad or lived in China may have drunk this company's milk. When it comes to milk in China, Yili and Mengniu are the famous brands. Why are these brands so well known? One reason is that you can find many Yili products in convenience stores and supermarkets. Additionally, Yili has signed sponsorship contracts with sports events like the World Cup and the Olympics, and by spending enormous amounts on advertising during these events, it has become a highly recognized company. Interestingly, milk was not widely consumed in China in the past. When I first went to China, it was difficult to buy packaged milk like in Japan. Initially, if you wanted milk, you had to buy long-lasting imported milk. However, with government support, milk consumption in China rapidly expanded. Before this, soy milk was the more common beverage, and even today, many Chinese people prefer to start their day with soy milk rather than cow's milk. The Chinese government promoted the health benefits of milk and supported dairy companies, allowing companies like Yili to grow rapidly. Yili is a publicly traded company listed in Hong Kong. Its stock price peaked in January 2021, about 3 years ago. Since then, the stock price has fallen by 75%. According to one article, this decline translates to a loss of approximately 150 billion yuan, or about 3 trillion yen at the current exchange rate. This is the loss for Yili alone, not the entire Chinese dairy industry. The question here is why this has happened. This is a major issue for China. Looking at the entire dairy industry, problems have repeatedly arisen over the years. For instance, a well-known incident involved the death of infants due to contaminated milk powder. Despite such scandals, the Chinese dairy industry grew rapidly afterward. This illustrates the dangerous information gap between China and the world. From an outsider's perspective, Chinese dairy products might seem risky, but domestically, the industry grew as the government promoted milk as safe and healthy following the scandal. However, even after that incident, problems like mold toxins being found in milk have occurred. Currently, over 2,000 complaints against Yili have been filed on consumer complaint websites, including issues with spoiled milk and milk with strange tastes. Nevertheless, Yili has invested heavily in state-of-the-art facilities and advertises that its products are produced in a safe and clean environment. But even with these investments, operational issues can arise. The Chinese government is likely pressuring companies to maintain strict standards because even Communist Party officials may consume these products. However, these investments have significantly raised production costs. At the same time, milk consumption in China, particularly among the younger generation, is declining. This means that even if Yili lowers its prices to break even, consumers still find them too expensive. It is already said that some dairy companies are operating at a loss. There are over 500 large dairy companies in China, and many are predicted to disappear. Yili itself is struggling with high investment costs and declining milk sales. In 2023, Yili's sales increased by 6.5% compared to the previous year, but profits fell by 14.8%, or nearly 15%. This is known as a situation where sales increase but profits decrease. When I discussed a similar situation with another company in a previous video, some comments questioned why profits would decrease even though sales were increasing. This is common in companies that invest heavily in promotions. Yili spends heavily on promotional activities, such as offering rebates to salespeople who achieve high sales and purchasing prime shelf space in supermarkets. These costs are part of the company's promotional expenses. Yili also spends large sums on sports-related advertising and sponsorships. While these efforts increase sales, they reduce profits. This is why buying stocks of companies with increasing sales but decreasing profits is not always a good idea. Yili's stock price has fallen by 75% over the past 3 years, and its market value has decreased by 3 trillion yen. This issue is not limited to Yili but is affecting the entire industry. As Yili expands its market share through aggressive spending, smaller dairy companies are losing momentum. As consumers increasingly avoid milk, the more Yili expands its market share, the more other companies will struggle. As a result, It is feared that most of the 587 dairy companies in China will disappear, leading to the loss of 500,000 jobs. Even Yili, the largest company, saw its profits decrease by 15% in a year and can no longer cut costs. This means they can't lower prices any further, but consumers already find them too expensive. This situation is similar to when the real estate bubble burst in Hainan Island, and most of the real estate companies there went bankrupt. Currently, a similar intense competition is taking place in the dairy industry, resulting in a situation where most companies cannot survive. The first to be affected will be the dairy farmers supplying the milk, who are expected to suffer significant damage. I will continue to provide updates on this situation. That's all for today. See you next time.